Joining us now to break down this proposal is Dan Geltrude, managing partner at Geltrude and Company. Dan, welcome. Let's take a step back here for a moment. Can you break down what this proposal actually entails?
Sure. So let me first say this. As a CPA, the IRS definitely needs more resources. They don't have enough resources to be able to do the job that they need to do. I know that's not popular, but I'm going to put it out there. Now, what this proposal is about, it's about the government funding the IRS over a 10-year period for about $80 billion. And the projection is that the return on the investment, meaning the additional taxes that will be collected over a 10-year period, is somewhere between $700 to $800 billion. So the concept here is to try to catch tax cheats. Now, that's the premise of where we are. So now, as it relates to this issue with banks reporting transactions to the IRS, what Janet Yellen is talking about is all accounts which have $600 or more, or $600 of annual transactions going through them, would have to be reported to the IRS. Now, we have to step back and say, are people who have more than $600 in their accounts really who we need to be targeting as tax cheats?
Yeah.
So this is where we go into the issue of this is really an invasion of privacy, and it has a lot of people concerned, and rightly so.
It's that $600 amount that seems to be catching everybody. I've heard jokes about, are you going to monitor my purchase of a couch because it's probably over $600? And to your point, the average person, I would think, has around $600 or more in their account. Can you break down what this essentially could mean for everyday people like you or I and people watching?
Well, the big issue becomes, for starters, is privacy and security issues. So now we're talking about transmission of information going from banks to the IRS. So now the banks themselves, well, they're responsible to secure our information. Okay, it's contained there. Now we're talking about a transmission to the IRS. Now, if you recall, you had ProPublica, which had somehow got into the IRS's system and was putting out there for publication Jeff Bezos's tax returns and Mike Bloomberg's tax returns. So all of us really need to be concerned about, first and foremost, that our information can somehow become public once the IRS has it, because they could be hacked. The other point of it is let's face it, do we really want the IRS, Big Brother, watching us that closely? Most people are not tax cheats.
No.
Do we really need to have this type of surveillance on Americans? I don't think so. And I think that's why people are really concerned.
I certainly think that there are people, and as I alluded to, a lot of chatter around this, concerned about that $600 mark, $600, benchmark that they're setting here. Certainly people concerned about their privacy, but there have to be, and there are, we know, people out there who do want tax cheats to get caught. Is there a way to do this bill, modify this version so that it captures some of that, $70 billion, $700 billion number that you mentioned earlier? Because it's a lot of money that we could utilize for a lot of different spending in the government.
I agree with you, and I think everyone agrees that people should not be cheating on their taxes. For starters, it's a crime. So I think what the administration is saying is they don't have enough resources to catch the people. However, the net they're throwing out there for $600 is way too low. The way I believe they should handle this is the IRS has historical information based upon the audits that are conducted. So let's take a look at where the tax cheats are and devise policies and procedures that targets those that we know have been notorious tax cheats. That's the way to approach this, not to bring everybody into the loop.
It's fascinating to me because as we talk about this and we talk about the House still debating this proposal, we do know, and I think you mentioned this, $80 billion is still earmarked for it. In the spending bill for the IRS to hire thousands of new staffers, Does it somehow end up, going through even though it's still in this proposal phase? And do we actually see this become a reality? Or do you think it only becomes a reality that $600 kind of benchmark number there is modified?
Well, let me say this. This is not going to be a popular part of that bill based upon the IRS having access to transactions over $600. So that's problematic as far as this staying in the bill. The other side of this is, though, remember, the projection here is that this type of funding of the IRS is going to produce somewhere between $700 to $800 billion of additional tax revenue. Now, that's being calculated into the formula of where are we getting the money from? So, yeah, we're going to have taxes and we're going to do this and we're going to do that, but we're going to catch these tax cheats. So if this comes out, then you're going to have to figure out, or Congress is going to have to figure out, where do we make up that 700 or 800 billion that we're counting on to fund infrastructure? So it's going to be very interesting. It's very unpopular. It's going to get more unpopular, but yet they need to figure out where to get those dollars.
Such a great point that you bring there, because if it comes out to your point that 700, 800, billion dollar figure gets pulled back, that price tag jumps all of a sudden, and the price tag is already unpopular. I think this points to the greater concern and the greater, goal of many Democrats have, which is to kind of close the tax gap. And it's been trying to do that since the Obama administration. Hasn't been that successful. It's trying to capture tax cheats under this kind of bill, although maybe poorly written or poorly thought out. Why has it been such a struggle to close that tax gap, to kind of target tax cheats?
Well, there's two different issues here. So catching tax cheats involves having the resources to be able to catch them. Part of the reason why this is in this bill is you're talking about raising taxes on high-income earners and as well as corporations. When you raise taxes on any group, that becomes a temptation to not comply. Why? Because people say, you know what? I think I'm paying more than my fair share. That becomes an incentive to start to cheat, to be able to hold on to more of your earnings. That's why this is going in as part of this bill. We're going to have some pretty substantial tax increases. So we better bolster up compliance to make sure that people are now going to pay and not be incentivized to say, I'll take my chances because the IRS doesn't audit that many people. Why? They don't have the resources. So they kind of go hand in hand.
Yeah.